Park. Very quickly, just two housekeeping issues. If you're looking for the toilets, they're just outside the door to your left on level 2. Otherwise, they're downstairs past the team store on level 1. The emergency muster point is outside the front doors and down onto the corner of Bishopsgate Road and Bishopsgate Street and Roberts Road near the roundabout. And in the event of an evacuation, please just follow the instructions of the nearest staff member. Thank you.
Thank you. Good. Welcome, guys. It's been 12 months since our last one. That 12 months has flown so quickly, it's unbelievable. There was a time when I thought my dad was telling me a lie when he said that the older you get, the faster the time travels, and I think he's right. So, welcome to the meeting today. I'm Peter Wade. I'm the Chairman of Mineral Resources and also Chairman of the meeting. I'd like to begin by acknowledging the traditional custodians of the land on which we meet today, the Whadjuk Noongar people, and pay my respects to elders past and present. I'd also like to introduce the board and management. On my right we have Chris Ellison, he's the Managing Director. Next to him is Mark Wilson, our Chief Financial Officer and Company Secretary. James McClements, Lead Independent Director and Chair of the Remuneration Committee. Zizi, Independent Chair and Chair of the Nomination Committee. And at the far end is Kelvin Flynn, Independent Board Member and Chair of the Audit Committee. I must admit I'm proud to be part of the board of Mineral Resources. It's been a board which has been stable, it's been strong, and I think it's been wise in terms of driving the business forward with Chris, as if you like, as the captain steering the vessel. Also in attendance today we have Alistair White from RSM, our auditors, Nicole Lewis from Computershare, who's here to oversee the polling process, and Roger Steiner-Price is our legal advisor here today as well. As always, it's always a pleasure to welcome Jeff Sherwin and Alan Dixon. They're the local representatives of the Australian Shareholders Association. They've been to every AGM since we listed, and they provide a great sounding board on investor comments and concerns to our company. In terms of the agenda for today, I'll address the formal proceedings of this meeting and invite our Managing Director, Chris Ellison, to provide a review of our financial year 19 performance and, more importantly, present our vision for the future in 2020 and beyond. As always, Chris will welcome questions after his presentation. So I can now formally confirm that a quorum is present and formally declare the meeting open. I'll ask you to turn off your mobile phones and other electronic devices. I always tend to forget that myself, so I'll just make sure it's done. Now, you should have all received a notice of meeting that was either mailed or sent electronically to shareholders. Unless there's any objection, I'll take this notice as read and all the resolutions contained therein as read. This is a meeting of Mineral Resources shareholders. As such, only shareholders, their appointed proxies or corporate representatives are entitled to make comments, ask questions or vote. All other attendees are welcome as observers. The Company Secretary advised me that there was no written questions from shareholders, so I can proceed with the resolutions. What we've decided to do, as we have the last couple of years, is to have a full polling. We're appreciative of the quantum of shareholder support as measured by the number of votes that have been received. But what we want to try and do is to make sure that all the votes get counted. So we will poll all of the resolutions. For those shareholders who have not voted and for proxy holders of unsubmitted votes, I refer you to the handset instructions that you'll given on registration, and I take you through the voting process. If you are eligible to vote when you are registered this morning, you would have been given a handset with instructions on how to use it and a white plastic smart card. Your name should be displayed across the top of the screen of your handset. If you are voting and do not have a handset or your name is not displayed, please raise your hand now and one of the assistants will help you to get started. In a few minutes' time, we'll open. There's one there. Okay, that's being attended to. In a few minutes' time, I'll open that poll on all items of business. At that time, your handset will activate and you will see the resolutions displayed on the device screen. Once you have voted, you will receive a confirmation that your vote has been cast. You can then either press the green button to advance to the next resolution or the red triangle to return to the list of resolutions. You can revisit a resolution and change your vote by simply selecting one of the other voting options. We'll now move to the official business of today's meeting. The voting is now open. Your handsets will activate displaying today's items of business. All right, okay? I'll leave the polling open while we discuss the resolutions and we'll provide you with a warning before we close voting. So please feel free to vote at any point during the question and answer time. I now table the financial report, director's report, remuneration report, director's declaration and auditor's report of the company and its controlled entities for the year ended 30th of June 2019. Now please note that this is not a resolution, so there's no voting on the matter, but all that information is included in this Mineral Resources annual report. I personally think the annual report, which includes these documents, is a great read. I might be biased about that, but it gives me the great opportunity to go through and see what's been written about the people, the company, and the year's strong performance. So I commend that to you. You would have got this as part of your package, but if you haven't, please come and talk to us after this and we'll organise to get you one. Now, does anyone have any comments or questions on that document or any of those issues? Financial report, director's reports, etc. Yeah. Yes.
I'm asking a question on behalf of a shareholder, Mr. Lustig. Thank you. Cheers. I'm asking a question on behalf of a concerned shareholder, Mr. Lustig. He notes that there's a strong organised community opposition that builds resistance throughout the Perth Basin area, especially in Dongara, Jurien Bay and Gingin. The Gingin Shire voted no to fracking. The Nationals MP for the area, Shane Love, put a motion to Parliament to not lift the ban on fracking. There are other ways for our company to make value for our shareholders that would return dividends. The oil and gas industry and fracking will put mineral resources at legal risk from pollution, not to mention harm our reputation. Are we going to force ourselves into people's properties who don't want to be navigating a gas field?
First off, look, thank you for the question, but it's not the appropriate time to ask that question. We're talking about the financial report at the present time. Any questions in respect of matters associated with the operations of the business will be addressed as part of the question and answer that Chris Ellison makes it when we finalise the formal part of the meeting. So I won't answer that question now, but you can certainly raise it again later on.
Mr. Chairman.
Yes.
I'm here.
Ah.
Look left.
11. Oh, sorry.
This is come back to the agenda. You were asking for comments on the
Yes.
On the financial statements.
That's right.
Annual report. Jeff Sherwin, my name, Shareholders Association. Firstly, I should commend yourself and the board for the deal that you put together. Must have been very difficult in this particular time with the lithium prices where they are, etc. I think that was very commendable. I just refer back to the loan, the US loan of $700 million, which has appeared in the annual report for the first time in 2019. Interest rate of 8.125%, which looks a bit toppy to the uninitiated like me. But maybe one of your financial people might like to comment on that. But my bigger point is that in the most recent announcement, you said that you were going to put the proceeds of the joint venture settlement into investment, either invested or opportunities, and not sort of repay the loan. I'm conscious, and everybody else is conscious, of course, every shareholder is conscious of the fact that there's an $80 million interest charge, I guess, on the loan that I've referred to. And if what you've sort of, the project that's related to has been mothballed, and we're hopefully for a short period, but if it turns out to be a long period, Is there a facility within the loan contract for you to change your mind and repay that loan? Because $80 million, that's part of your expenditure account, would be significant in terms of reduced profit. So I just wanted some reassurance that that option was there and not too high a charge to get out of the loan. So is there you have an answer to those two questions?
Yeah, look, thanks, Jeff. Look, what I'll do is I'll pass the first part of that question across to Mark Wilson, who's our Chief Financial Officer, and the second part I'll ask Chris Ellison to answer for you.
Jeff, thanks for the question. We took the view earlier in 2019 that we needed to diversify our sources of funding away from the Australian banks, who at the time were offering quite short-term tenor for the sorts of assets that we were investing in. We saw a window of opportunity in the United States and we took it, and it comes at a slight premium in terms of the interest cost. Yes, I accept that, but what it gives us is access to 8-year money, which we now have. So that loan's not repayable for another 7.5 years, and it's unsecured, and it has relatively limited reporting obligations and covenants. So it actually is a light touch loan from the company perspective. But more importantly, it gives us debt that matches the asset profile that we're now invested in. So we think it's a great outcome for the company and shareholders.
Jeff, if you wouldn't mind, can I answer the second part of your question in my briefing that I'm going to give when Peter closes the meeting? I've got a bit of detail in there around what sort of returns we can get on those sort of funds. That'll probably give you a bit of clarity. Thank you.
Thanks, Chris. Any other questions? Okay, so there's no further questions in relation to the financial report. I'll now ask the meeting to consider the formal remuneration report issues. Resolution 1 is the adoption of the remuneration report. The first motion for consideration today is adoption of the remuneration report. The Corporations Act requires the resolution to adopt the remuneration report be put to a vote. However, the resolution is advisory only and non-binding. For those unfamiliar with the law relating to the remuneration report, let me quickly summarise the process for you. If greater than 25% of the votes are against the adoption of the remuneration report, the company will receive a first strike. This will prompt a requirement that the remuneration report for the following year must explain how comments received from the shareholders were addressed, and if not, why not. At the following year's AGM, if greater than 25% of the votes against the remuneration report, the company will incur a second strike. If this occurs, the meeting must include a motion to hold a spill meeting within 90 days. If at the spill meeting the motion to spill the board is passed, all directors, excluding the managing director, who were in office when the company directors' report, as included in the company's 2019 annual financial report, was approved, will vacate the office and may stand for re-election at the spill meeting, and a new board will be elected by shareholders. All key management personnel and their closest related parties are excluded from voting on the motion to hold a spill meeting. Now, as you would be aware, we received a strike last year in 2018, as greater than 25% of the votes were against the motion to approve the remuneration report. The Remuneration Committee, under the leadership of James McClements and the wider board of directors, have actively engaged with shareholders and proxy advisors during the year while working with multiple third parties, advisors and companies to ensure we understand in detail the concerns that prompted last year's strike. Having listened, gathered and put together appropriate responses, we have implemented major changes to our remuneration policy for financial year 20. The major changes developed for financial year 20 also had regard to an increasingly tight labour market within the Western Australian resources industry. The changes made are set out in the remuneration report and include changes to the remuneration arrangements for both the Managing Director and the key management personnel, as well as a redesign of the long-term incentive plan. We believe the changes introduced for financial year 20 should be considered a significant step in the right direction. We expect that we will continue to review our remuneration and incentive policies in the coming years to reflect best practices in the industry and ensure an appropriate focus on the sustainable long-term performance is in accordance with our business strategy, while reflecting the need also for simpler, more transparent governance and fairness responding to investor feedback. I think the important thing to understand in remuneration schedule basically is that it's not just a payment package, it's a initial payment for being involved in the position. It's short-term incentives for performance and long-term incentives for performance. And the majority of the payments for our key personnel are based upon performance measures. So I think when you have a look at what we've done for the financial year 20, and it is included in this report, you'll see that the approach we've adopted gives us the best opportunity to retain people and then achieve the performance outcomes that we require. Now, the detailed proxy votes cast on Resolution 1 are now displayed on the screen. At that stage, it shows that the for vote is 83.57%. If after the poll we receive a second strike, we'll go to a poll on the spill resolution, which we will know after Computershare provide the final polling numbers at the end of voting. So voting on the remuneration report is a significant issue. So I'd be pleased to answer any questions you may have on this resolution before you start to vote. Yes, Jeff?
I promise this is the last time I'll be on my feet, but firstly, congratulations for achieving a 83.6% vote for, which is a big improvement over the last few years. We've supported you over the last couple of years when others haven't. We felt that we had trust, I suppose, in the system that was moving towards a position that we approved of. This year, I must say, there were giant steps made, and I'm not surprised that you've overcome the large vote against. There were the involvement of share investment from the short-term investment plan, short-term incentive plan, was welcomed. That's been one thing that was needed I think, to be addressed, and that's been approved. The long-term incentive arrangements surrounding return on invested capital was good to see the maximum incentives being achieved with a higher rate of return there. We always felt that 12% standalone situation was a bit low, so I think that worked well. And the increase to 4-year, measuring over a 4-year period, the performance of executives, I think, was a move in the right direction from 3. So those 3 areas, I'm sure, has tipped the scales in your favour this time. We also note the reduction in the CEO's salary and the shift across to a higher percentage of risk reward for the CEO, which I think has also been welcomed. So I'm representing 62 shareholders today, but I'm talking to the retail shareholders in this audience and say that we recommend that you vote for the remuneration report on this occasion. Thanks. And I won't be on my feet again. I'll be voting in favour of the director appointments. Thank you.
Jeff, thanks very much. It's always good to get a positive response. Any other questions? No? Okay. Well, as there are no further questions, we'll move to the next resolution. If you've not already done so, please enter your votes for Resolution 1. If you require any assistance, please just stick your hands up and people will come to assist you. Is everyone completed on that? Okay, thank you. We'll go to resolution number 2, which is the re-election of Director Mr. Kelvin Flynn. The resolution is to consider and, if thought fit, to pass with or without amendment the following resolution as an ordinary resolution. That for the purpose of clause 13.2 of the Constitution, ASX Listing Rule 14.5, and for all other purposes, Mr. Kelvin Flynn, being Director of the company, retires by rotation and being eligible, be re-elected as Director. Now, we normally ask for any questions or comments at the present time, so I perhaps should make a bit of a statement that from my point of view, Kelvin's a strong and committed member of the board. He brings a great deal of wealth of knowledge and experience in all commercial and financial aspects, covering all of the works that we are involved in, which is mining services, international operations, etc. So I fully support, and the board fully supports, the nomination of Kelvin as an ongoing director, and we welcome the opportunity for you to vote for it at the present time. The details of the proxy votes are now displayed on the screen. Are there any other questions or comments that anyone might want to make about Mr. Kelvin Flynn and his director's role? No? No further questions? Then please enter your votes for resolution number 2. If that's all been done, we'll go to resolution 3, the slide. Resolution 3 is the re-election of another director, Ms. Zizi, to consider and if thought fit to pass with or without amendment the following resolution as an ordinary resolution. That for the purpose of clause 13.2 of the Constitution, ASX Listing Rule 14.5, and for all other purposes, Ms. Zizi be a director of the company, retires by rotation and being eligible be re-elected as a director. Again, I just provide a comment. Zizi is our most recent board member, but she is an outstanding acquisition. She provides great knowledge and insight into international mining operations, international trade, marketing, across the whole range of the mineral products that we sell. I believe that she will continue to be a very, very strong and worthwhile member of the board, and I urge your positive vote for her. So the details of the proxy votes cast on resolution 3 are now being displayed on the screen. I can't formally say that ZZ is approved, but 98.97% is a very, very positive response. If you're not already done so, please enter your votes for resolution number 3. Okay, presuming that's all that's done. Resolution 4 slide, that's a spill resolution. Now, resolution 4 will only be tabled after polling on resolution 1 has closed. So last year, more than 25% of the votes cast voted against the adoption of the RIM report. That's the first strike. We'll wait until the polling of the first resolution before we determine whether there needs to be a polling on resolution number 4. So all items are now being discussed. I'll shortly close the voting, so please now ensure that you entered your selection for each resolution. If you require any assistance, please raise your hand. A Computershare representative will assist you. Now, I've been told that the voting of the poll should only be several minutes, so if you just want to talk amongst yourself while we get that final counts prepared, then we'll be able to proceed. We've got more people or less people than last year?
I know we've got more than
Have we?
last year.
Okay, look, thanks very much for that. The voting is now closed, and the scrutineer has or will complete the final tally, and you'll see the results up on the board soon. There we go. Okay, thank you for that. If we, as you can clearly see, all of the resolutions have been approved. So if I go through them formally, Resolution 1 being the remuneration report has been voted for. Now, that's the first time in 4 years I've been able to say that. It's a pleasure. I want to thank all the investors for supporting the company policy in establishing and implementing a pay and incentive scheme that enables us to retain and reward our management and staff to continue to achieve our outstanding results. And the results are outstanding. But more than that, I particularly want to thank James McClements, our chairman of the Remuneration Committee, and his support team for the outstanding role in shepherding the report through the proxy advisors and explaining it to our investors. So, James, thank you. Appreciate it. As less than 25% of the votes cast on Resolution 1 were voted against the adoption of the remuneration report, I withdraw Resolution 4. Resolution 2, being the re-election of Kelvin Flynn as director, has been voted for. That's a great outcome and maintains the strength of the board. So, Kel, well done. You stuck with us for a little bit longer, man. And Resolution 3, being the election of ZZ as director, has been voted for. The vote of more than 98%, in actual fact 99.33%, is great recognition of her contribution. So well done, ZZ. And there's no competition, Kel, but ZZ got 99.3%. Okay, now look, thank you all for your patience. I know you're keen to hear what our Managing Director has to say, but before I close the meeting, I want to thank our Managing Director and the full Management Resources Board and all of our team for the work they've done over the last 12 months. That's driven the company to ongoing success. It's set us up for a substantial long-term growth over the years, and I'm honoured to be part of that team. I also want to extend my thanks to all the shareholders, yourselves who came along today, and all the other shareholders who might be listening in. We appreciate the trust that you've bestowed upon us, and it is our intention to continue to look after what you have indicated to us in terms of performance, and we're here to look after your money and to give you the best opportunity to grow. So thank you for that. As there's no further business, this concludes the formal proceedings, so I can formally close the meeting. But I now invite Chris to bring to life the performance of the business this year and what we have planned for the future. Thank you.
Respects, as always, to them, elders past, present and emerging. I'm going to spend probably about 30 minutes here. I want to tell you where the company's been over the last 12 months, how we've achieved the results we have, and what we're going to do over this coming financial period we're in right now, and what we intend to try and do with the business sort of long term, just to give you a bit of an understanding of the sort of business that we've developed and where we think it's going over the next 1, 2 and 30 years. I'll also explain to you a little bit about sustainability. So you probably noticed last year the hot topic was tailings dams. This year sustainability is very important, and we've put a lot of focus into it the last 3 years. And our internal team led by Diana, sitting over here on my left, has done a pretty amazing job on bringing a lot of recognition into the business and getting us much more focused around that sustainability. It is critically important to our business going forward, and I'll tell you a little bit about some of the innovation that we've been playing with over the last few years, and we're really starting to kick some goals with that. I'll also try and build inside here is there's a few clues on what we're doing in terms of the return we're getting on money invested. So Jeff, I'll try and highlight some of that to respond to your question. Key highlights for the year that we've been through up till June 30th. We have We've reshaped our mining services business substantially with our management team, the way we go about things. We've actually leaned out our management and we've got some very high quality key people that are running it. 3 of them are sitting out to my left here. I've got Shelley Robinson that's come into the energy business, and she's done an outstanding job on pulling together our gas acreage, our power stations, all those energy, buying our gas, a multitude of things. Paul Brown's been with me for probably a good 6 years now, probably feels like 12 or 13, Paul, but Paul runs all our mines and done an amazing job, and Mike Gray's back for his second time and last time, and he's our COO who this is a very unbelievable hands-on team. So we've prepared ourselves for the future over the next 3 years. We think we're probably going to at least double our mining services business. It's a very important part of the MinRes story. We have this hands-on culture. We're all hands-on. My staff tell me I'm too hands-on, but it's important that we understand our business. We know what's happening in it every day, and our key people know what's happening on their sites, and they know how to deliver, and we consistently deliver in this business, and it's not good luck, it's awfully hard work. So we've consolidated our lithium business. We've got an outstanding business. I'd rate it as the top 5 lithium businesses in the world. We have wound up with a 40% share in Wodgina. It's the largest hard rock deposit in the world. I mean, we've drilled down about 500 metres into that pit. We've had a couple of rods that have wandered down another 100 or so metres, and it just gets better, and the grade gets better. There's more ore down there. We don't know how much further it goes. We suspect beyond a kilometre. So we've got a lot of upside on that deposit. It's a great deposit. It's got probably what I'd describe as the best spodumene plant in the world sitting on it. It's brand new. It's an amazing plant. We've got 40% at Kemerton with the hydroxide plant currently under construction, and we got 50% of Mount Marion. So sitting in there, we've got 2 of the best partners in the world. The guys in Mount Marion, Ganfeng, outstanding partnership. We've raised 2.2 billion in cash. 2.2 billion if you say it slowly, and it's in the bank. It's pretty amazing to have that. We started the business, I did many years ago. The day I started, I had $10,400 in the bank, and I had a credit card with a $50,000 limit on it. So it's come a long way. We've delivered a reasonable result this year, not outstanding, but reasonable, 433 million EBITDA. But I think I told you over the last 18 months, the year just passed is going to be a building year, and our return on funds invested was lower than probably it's ever been, but we were focused on spending $900 million, and we've done that fairly well. In the lithium front, both the sites were up. One was built, one was upgraded. They've finished the iron ore. We started Coolanobbing, as you know, that has gone extremely well. We've progressed a Yilgarn strategy. Paul Brown's developed a pretty amazing 10-year plan down there. There's still some work to do on it, but I'll tell you more about that later. And we've got a good production strategy for Camina and the Marillana JV up in the Pilbara. So they're going to deliver some good results for us not too far down the track. We've been fairly successful on most fronts on our innovation. I'll tell you a bit about them, but we've got a 15 million tonne crushing plant we've developed, and we joint ventured that with Met, so it's going to go worldwide. We've got 450 tonne carbon fibre dump truck trays, finally, that actually work. And we're about to produce the next batch, 200 tonners. Synthetic graphite plant, commissioned extremely successfully. Boss has been a little slower than we like, but I'll talk a bit more about them down the track. Safety, it's the core of our business. I mean, it's become beyond critical to us. I mean, if we look at bidding a job or doing a job, we look at who we're going to be working with. If we don't think that they can deliver the safety that our people need to keep them at the level they're at, we don't do it. I mean, at one time we'd take on any job and then work out how to do it safely. Now we basically have a look and see if we can put our people in that environment before we even start. Our safety's in a very good space, has been for quite some time. It's been a challenging year. We had 642 new positions in the company. a lot of them construction. Difficult to manage because those guys are production orientated. I mean, they're driven by getting stuff up in the air. We had a bit of a blip on the radar. We want to be down around about 2.5, our target on what we call our TRIFR, and we got up to 3.99. I mean, if you go back and have a look where we were back in about 2012-13, we were sitting up at 14.5, about the industry standard. When you get down to 2.5, most of the banks aren't down there. The government departments that monitor us on safety aren't down there. So it's a pretty outstanding place to be when we've got guys that spend all day throwing rocks around. So our safety's been in a good place. We got to 3.299. We've had all hands on deck and we've been looking at everything that we're doing. We're currently down at 3.61 on our TRIFR, and our lost time injury frequency rate is at 0 again. A good place to be. Not many companies have a lost time injury rate of 0, and that's where we want to live for a long time. Financial performance, as I said, it's been a reasonable year. We haven't shot the lights out, but we've got an awful lot done. We've got the business set up for the next 20 or 30 years in a range of areas. More work to be done, but we've basically created a business that's got 20 to 50 year horizons, and it's sitting across mining services and commodities. We've got a very secure geographical spread, and we're spread through a range of commodities that have got longevity in them. We're working towards getting to the right part of the cost curve on the commodities, and the mining services business has been an outstanding business and it continues to grow. And it's so damn good because our people drive it that way. They drive the results that deliver a really high value to our customers. And the customers that we have are generally a very high quality customers in iron ore and gold, people that appreciate safety and they appreciate longevity. Since we listed back in 2006, we've established some pretty decent records. We've pretty much converted 100% of our reported EBITDA into cash, quite an outstanding record. We've averaged about 18% return on invested capital year in, year out over the last 12 years, and I can tell you, give me some more cash and we'll get you some more bottom line. When you start from a base of $10,400, it's called undercapitalised. We've struggled for a long, long time. We're feeling pretty tough at the moment, and I'll talk about how we're going to spend that cash a bit later. Shareholder value. I think we've created a pretty good record on driving shareholder value. We're very focused on getting margins out of our business, and we get that through performance, not through good luck, but we can pass that back to our shareholders. I always look out for David Bowden sitting here in the front. He was on our chairman's list when we first listed. I think, Phil, you probably were too. And I think, it's like Kerry Stokes says about telethon, I think these are the most important shareholders we have because it's back at the families and eventually it gets there. But David, you bought shares at 90 cents. We've grown that value to $18.58. So that's 20.6 times what you invested with us. And we have an annual compound growth rate of 26% over the last 12 years. We think that we can keep that up. It gets tougher as the business gets bigger. So if you think 12% is a low hurdle for our staff on bonuses, I mean, the bigger we get, the tougher it gets to keep the margins rolling. But I think we can keep achieving them certainly over the foreseeable future. We're paid a dividend every 6 months. I remember when we listed and Peter said we're going to pay dividends every 6 months. I said we haven't for the last 15 years. Why are we going to start now? But we have. We've returned $860 million in fully franked dividends to our shareholders. And we've had average earnings growth of about 15% year in, year out. Economic contribution, we're becoming much more relevant in the community nowadays as we've grown. We've got about 3,700 people on our payroll. We're a major contributor to the West Australian economy, and we do that through all of the basic things that we provide in terms of jobs, taxes, royalties, wages and benefits. We're also a very major contributor across charities, regional and local. through health, well-being, education, employment, and people in need, very important people in need. People development is something that we've been focused on for quite a number of years, and we've really stepped that up over the last few years in terms of the in-house training we do is substantial nowadays, upping people's skill levels, giving people opportunities that generally wouldn't get them, and being able to bring them into our workforce and do something significant. Further education, apprenticeship programs. Last year we were the largest apprentice intake down on that Kwinana strip, which is quite a thing. We're going to do it again this year. We're trying to do better this year because there's no better feeling than bringing young kids inside the business and being able to turn them out 4 years down the track where they can actually go out and hunt for themselves and bring home their own meat. It's an amazing feeling, and we've got some second generation MinRes people coming through. Their parents are working in the business, and we're breeding some new management that are starting to come up through the business. It's a good feeling. So the mining services business and the commodity business, I think pretty much over the last year, we'll give you some guidance, but it's been fairly boring in the sense that it's been extremely well run. It's been flat. The guys have delivered on budget and they've bettered it. We've done a number of things around on some of the plants. We've got about 16 crushing plants out there, a couple of the big flotation plants that we manage. We started, of course, the crushing down at Cooley. The Wodgina crushing started up and was going extremely well, and then we turned it off in November. It's an outstanding piece of kit. The crushing plant at Wodgina, MinRes still owns, so that's part of our mining services business. That wasn't part of the sale. Processing has all gone pretty well. Same story at Wodgina. The float plant was pretty amazing. We built it in 3 trains. We cranked it up. We turned train 1 on. The other 2 are fully built and ready to go. And we were producing some amazing grade out of that. We were getting up 6.5%, 6.7%, and we were delivering some significant tonnes. Not an easy decision to turn up. Contract mining. Paul and Mike have really grown that business substantially over the last 12 months in particular. Commodities performance, again, look, I won't go into it too much. You've got some guidance on what we're doing. The lithium pricing, if you're around last year, we were rock stars with lithium and we were down and out on iron ore. The pricing was pretty average. This year, it's who cares about lithium? It's all about iron ore. So the market turns around. We're lucky we're in both, and we're in mining services, so we've got a range of different incomes, and we've got our mines north and south, so we're down here in the 4 seasons, we're up north in the wet and the dry, so we're able to manage those reasonably well. Mount Marion, it's just been a fairly steady, boring plant for the last 3 or so years. I mean, I looked at the report this morning and it delivered some significant tonnes. I mean, if it done that for the rest of the year, we would probably have to turn that off. I mean, it's outstanding, the plant down there. Construction at Wodgina is complete. The iron ore business, it's obviously benefited from the price increases. It's better than last year. I mean, I think that's probably a pretty obvious thing to say. The prices are good, and this time next year, I'd love to know where they're all going to be. Coolia Knobbing, it performed to expectations, as did Iron Valley. So in our outlook, mining services, going forward, the year we're in now, and in particular going forward the next 2 or 3 years in mining services, I think over the next 3 years we'll double the mining services business, and we'll double that in terms of workload, we'll double it in revenue, we'll double it in bottom line. Our annuity earnings stream in that business is good, but we have a combination of external contracts in there and the joint venture contracts that we run through the likes of Mount Marion, but we take some risk in there. We build, own, operate those plants, and we deliver a product. Crushing, we think that will probably grow about 20% this year. The rest of the mining services business probably 30% or better. Processing will be steady. Contract mining, we think, is probably going to be up around 75% improvement on where we're at the moment. And commodities, Mount Marion will probably be just more of the same. I mean, we're predicting 360 to 380,000 tonne of total product down there. We're still running the 4 and the 6%. We're running the 4% because Ganfeng want it, they love it, and they have a plant that consumes it. We were going to be all in 6 by now, but we need to keep delivering that. They are our one and only customer down there, as well as our partner. As I said, a great one. For the first quarter of this financial year we're in now, Mount Marion produced 115,000 tonnes, and I think that someone forgot to tell the site that we only want 360 to 380, so the plant is producing pretty well. Wodgina, it's going to remain idle for the foreseeable future. I don't see that starting up this financial year, but it depends on supply demand, and I mean, no one's really sure where that's sitting. Coolionobbing, we started that at 6 million tonne. It's currently sitting at 7.5 million tonnes, and we're heading that up to a run rate by the end of January, early February. It'll be running at 11 million tonnes. So we're well and truly on our way to getting that done now. Iron Valley, it'll remain at a steady state. It's high cost, Iron Valley. It's 320 k's from the coast. It's about $26 a tonne to haul that in there with quad road trains. We bring it in at about 130 tonne a load. It's also got high impurities in it. The phos in that deposit keeps creeping up, and the deeper we go with the digger, the more water we get. It's got an underground lake out there, but the guys have been managing to shift that. It'll go on for a period of time yet. Camina and Marillana, we've been doing some work down there on drilling on the both of them. We're working pretty hard on Marillana. We've just kicked off another study on that. We think that we've got something significant there with our joint venture partners, with Brockman, and we're aiming to start development on that in the second half of calendar 20, and we think that we can bring that into production. And Kumina will have a JORC statement later this financial year. A couple of pages there on guidance on tonnes we're going to mine, lump fines, what we think our costs are. We'll give you some guidance on the EBITDA mining services. All you have to do is figure out what you think the commodity price is going to be, and you'll know how much we're going to make this year. CapEx also, we've put down what we think we're going to spend this year going forward. Investment philosophy. What are we going to do with all the cash? We're going to do what we always do. We're going to be extremely careful with it. We're going to manage our bank account and our balance sheet. We've always managed our balance sheet extremely well. We're going to keep doing that. We have got a fair amount of cash in the bank, as I said, but we're fairly frugal with the way we spend it. And I mean, probably our focus going forward immediately this financial year that we're in now is to focus on the operations and make sure that we get everything we're getting out of them. So we're looking at spending some money on a couple of areas. Down at Cooley, for example, we're going to put in another one of our next-gen crushing plants. We're going to put in an automatic train loader, bucket wheel reclaimer, a stacker. We've got them over at Carina. We're going to shift them all over. It's probably going to cost us $40 or $50 million to do that upgrade, but it's probably going to save us, 11 million tonne run rate for the next 10 years. It's probably going to save us about $3 or $4 a tonne. So, we're going to do those sort of value adds, and we're going to do some incremental changes on some of the plants. We're going to spend some money up the Pilbara to keep Iron Valley running. In the medium term, we've got 5 pretty decent projects that we've been looking at. They're across 4 different commodities. They range in capital spend to get them up and running. The little one would be about 600, the big one would be about 4 billion. They're long-term jobs. They're 25 to 50 year type projects. I have no doubt that 2 or 3 of them are going to come to life for us. So we're not bad at identifying opportunities and being able to bring them online and bring them on at the right cost. We don't necessarily develop a 20 million tonne operation on day one. We sort of start off at 2 or 3 million. For those of you that don't understand the deal that we done on Wodgina Lithium, we just give you some details on the transaction. But in summary, back in December, we said that Albemarle and MinRes are going to get together and we're going to have a 50-50 joint venture. Albemarle are going to write us a cheque for it, step in the breach, and then somewhere down the track we're going to go and build 2 or 3 hydroxide plants up at Wodgina. As the world changed and we could see that the lithium market was getting a bit tough, we didn't want to go and spend all that extra capex. So to go and build those hydroxide plants at Wodgina, we were probably going to put out about $1.5 billion to give us 3 hydroxide plants. And while Albemarle were building something similar down at Kemerton. So what we did, we revised the deal. I went over and sat down with them. I revised the deal back in August, and we changed that slightly, and we actually completed the transaction about 5 o'clock on the morning of the 1st of November. So what we've ended up with is that Albemarle and MinRes have got a 40-60 joint venture, MinRes 40%. Albemarle paid us for that 60% shareholding they took in Wodgina by way of a $820 million US cheque that we put in the bank, and they give us a 40% stake free carry in the, well, not free carry, they paid us a 40% stake in the Kemerton hydroxide plant in the first 2 25,000 tonne units. They estimate they're going to spend 1.2 billion US building those. Our share of those is about 480 million US. So in total, a healthy payment we got for it, but at the same time, high value for Albemarle. They've got into the biggest deposit in the world together. We've got a pretty amazing business with the MinRes' capability of being able to mine and operate on sites, and those guys outstanding on their ability with hydroxide, managing chemical plants and sales down the track on these high quality products. They've got long sales contracts with a lot of the better companies around the world. So we've got a business sitting there now. It's probably going to last 30 to 50 years, and it's paid for. We own it, and there is a dip in the lithium market at the moment. We understand that, but if you have a look forward and go, how are we going to power the world? I mean, what sort of cars are going to be on the road 2025 to 30? We're going to see more electric cars. We're going to see more power storage and batteries. We're going to see, and one thing's for sure, we're going to see a lot less fossil fuel getting burned. Whether our generation likes it or not, our kids are going to change the world. So we've got a good business. We changed the name of it to Marble, M-A-R-B-L. Nothing too scientific about that. We've combined MRL acronym with the ALB, Albemarle acronym, come up with Marble. No geniuses there. We're getting into the hydroxide market about a year earlier than we were. That's MinRes with our shareholding down in the Kemerton plant, and that's due to commission into early 2021. So that'll come around fairly quick. And the project, as you know, straight away we formed the joint venture, and before the markets open in New York or in Australia, we put it on care and maintenance. We're spending about 4 weeks winding it down. Sorry, I lost my face. Someone lost Peter's memo. Tough turning a plant off like that. We've never done it in MinRes before. We've never employed a whole bunch of people and said, whoops, we've screwed up, we've got to put you out of work. This time we did, and it made good sense. It was the right thing to do to shut this plant and preserve the ore body, and for us to get our focus on getting these hydroxide plants up and running, and then we got somewhere to feed them and we get the real value out of them. But we had 272 people at Wodgina. We've been able to relocate 184 of those, so we haven't put them all off. Then we've had another 80-ish redundancies that we've had to lose. But look, demand is going to continue to grow for lithium. It is, as I said, I think it's an outstanding business. As these hydroxide converters coming online, the need for the spot will just continue to climb. So we also get sitting behind this lithium business. We get a lot of optionality going forward because we're out there. We want to convert gas, those Perth Basin opportunities, so we can downstream, and the opportunity to downstream with these ore bodies we've got is endless. So if we ever want to upgrade our investment, it's always a great opportunity sitting in the lithium. Iron ore in the Yilgarn. Just a story on how that unfolded. We took that over last year. The guys, the team were in there. I think we got possession on the Tuesday night. On the Friday morning, we had first ore on a dump truck coming out of the pit. They ramped that up awfully quickly. We thought we had a run rate of 6 million tonnes for about 5 years with the information that we had available. We think now that we're going to 11 million tonnes. We think we've got a solid 10-year plan down there, and we could have well beyond that. We've also got multiple targets down there that have never been drilled with iron ore showing on the surface and all the right signs. So we have got, sitting alone up at Mount Richardson, we've got a JORC exploration target, they call it, of between 30 and 83 million tonnes. I don't know how they figure that out, but it's JORC and it's there. There's opportunities down there for juniors. We've got all of the infrastructure around Cooley Carina, and we can get it onto a ship. So certainly the juniors that are down there, if they got stranded, or we are talking to some of them. The plan going forward, get it up to 11 million tonnes. We've secured the infrastructure, turn on the trains. We're going to be running 885 wagons and 21 locos. And probably worth a mention, our West Australian government, they put their hand up last year and asked us if we'd get involved in this. They wanted to save 400 jobs. They did that. They got right behind us getting this thing started up. We got it going in record time. By the time we get through to the end of January, those 400 jobs will be at 654. Plus there'll be another 45 connected with rail and workshop down in Esperance, much needed down in that region. There'll be hundreds of jobs that are provided indirectly through all the support industry all over WA that supports the operation. So well done to the McGowan government for having that insight and really stepping up. Perth Basin, as I mentioned earlier, look, I think there's some people outside that are really happy we've got a hold of that, and we are going to, we've got some plans in that next year. We're going to do about 250 kilometres of seismic work up there, and we intend to go and drill a hole about 4.5 k's deep. So it's good country. We're sitting adjacent, and I'd say adjacent, we're very, very close to Australia's 3 largest onshore conventional gas discoveries ever. The Perth Basin is incredibly underexplored. It's been mainly mined by the share market over the last decade or 20 years, and there's been very few holes in it. There's a few good players getting in there, like the likes of Santos and Beach are in there. They're going to do a lot of good work. We're working with them, and we're going to drill a 4.5 k deep hole. It's going to cost us about $12-ish million, I think, Shelley, and we're hoping that we hit conventional gas. Shelley tells me, keep saying conventional, because conventional gas doesn't need fracking. And the last thing we want to do is be fracking. We're not. We are concerned about the environment. We don't know that there's any real evidence that says that fracking does any damage, but we're not fracking and we don't intend to. We're looking to bring the gas online simply because we understand the gas still causes emissions, but right now we're burning a lot of diesel in our pits, and we've been on a mission to try and reduce that over the last 3 or 4 years, and we are slowly getting there. So working towards sustainability. Our innovation over the last 3 years has been reasonably significant. We've been obviously in lithium, and we think that's a step in the right direction. So we're dealing with a very clean product that I think our shareholders can be very happy with us. We think certainly the lithium is going to put electric vehicles on the road as opposed to diesel and the fuel burning cars that we got now. We're installing solar power wherever we can on our sites. We're installing natural gas where we can run a pipeline, and we're installing LNG where we have to truck the power in. So we've made a lot of inroads over the last 3 years on being able to reduce the diesel burn. If we are successful with the Perth Basin, if we can use the gas out of there, it's plumbed already up into the Pilbara. We can actually put it in the pipeline and backload it. So we're probably going to reduce our emissions by at least half if we can move to gas.
We're also been quite successful with our little graphite plant. I'll talk about that, but that produces hydrogen as a byproduct. So moving in the right direction. People, as I said earlier, critical to everyone's business. I mean, we've been unbelievably focused on that. We've really turbocharged our focus on our people over the last 18 months or 2 years, and we're focused simply for one thing. We want to retain them for as long as we possibly can. We want to take them through to retirement. The best team of anything you can put on the field is one that's been together for a long time, and we've got, without doubt, I've got the best staff I've ever had in the business, and we're working on a whole range of things for retention. We're looking at our diversity. We're looking at making sure that all the girls that want a job in our business get the same opportunity as the boys get. And in our industry, it hasn't always been like that. We've made a lot of changes in that area. We've got some pretty amazing women in a lot of positions right through the business, and adding a lot of incredible value. We're valuing people at a much different level, I think, than what we have from the old school in the past. We're rewarding them as well as we can. So when we make a judgment call, and we need to be able to reward our people through your remuneration, through short and long-term structured bonuses, I mean, it's important. You need to trust the management knows what they're doing, and being able to do that, to get the balance, to get the returns. I mean, a lot of our people are working a lot of hours, and they are delivering. If we're delivering, I want to be able to pay my people. That's really important. We're also creating an environment for them. I mean, with the diversity in our business, it's pretty hard to get the diversity with most other companies that we deliver. They get a whole range of different things that happen in their day. They're not necessarily all make up for a great day, but it's a good place to work. It's a pretty amazing place. We're developing a new office, and the office that we're developing, it's going to be a lot more of a Google-style office. It's going to be, if someone told me I was going to do this 5 years ago, they wouldn't be around long. But we're going to have in there, we're going to have a parents' room, we're going to have kids coming in after school, we're going to have someone looking after them, making them afternoon tea. We're going to have a prayer room, we're going to have a gym, we're going to have yoga, we're going to have Pilates, and we're going to have instructors in there. On the top floor, we've got a full-on 5-star restaurant going in, because we do the cooking in all our camps, and we've got some amazing chefs, and we have high-quality food, and we'll be serving it to all our staff. We're going to have, on level 1 and 3, we're going to have outside professional coffee baristas come in and set up coffee shops inside, and if you're working for us and your wife or your husband wants to drop by for a coffee for 20 minutes, knock yourself out. We want that environment. You come down and see us, you'll be in the coffee shop having an amazing cappuccino, or if you crack it at lunchtime, you'll be having Wagyu up on the 5th floor. So we want all of this environment happening. We're going to have rooms where we encourage people to work together, and they look at how they're planning the business, how they're operating on a day-to-day. So we want 8, 10, 12 people spending a couple of hours or 3 or 4 in these rooms working together rather than sitting in their office. So different ideas. We'll see how it turns out. I'll let you know about this time next year. Charities. I'll try and wrap this up. Community support and sponsorship is very important to us. We've got 9 long-term partnerships in some significant charities. We're mainly trying to care for the disadvantaged women, kids, medical, education, generally people in need. We've got 9 long-term partnerships. We contribute to over 40 organisations. We've got 15 regional causes, 7 educational causes, and 6 crisis centres that we look after. So, and this isn't one of them. This is the Eagles. It's pretty amazing too. Innovation. We've got a really strong culture on innovation. It's important to us. We've been able to develop our crushing business to be the largest in the world. That didn't happen by accident. We've had some fairly amazing innovations that go around that on the cost of being able to operate them and deliver for our clients. And then later now in our own business. The plant that we built at Wodgina, designed in-house by Mineral Resources, these plants are brand new. There's no EPCM contractor that knows how to design them. We designed that, and we designed Mount Marion and both in-house, and turned them on, and amazingly they work incredibly well. I mean, we got some pretty clever people working inside the business. So we've had 4 innovative projects running for a while. Right now we've got a 15 million tonne crushing plant, the Boss Light light rail system, carbon fibre factory and synthetic graphite. And we got what we call the Pilbara Infrastructure Project. It's one of those big, expensive, long-term projects we're working on iron ore. Over the coming period, next 6 months, we're looking to get an understanding of the rail line and how we can develop that, and that's the highest risk, most expensive part of this project. It's working how to cut about 320 kilometres of flat line, getting our head around that and making sure we can do that. If we can do that, we can deliver the project. So we'll know that over the next few months. We're getting all the approvals finalised, we're getting a state agreement put in place, and we're doing a lot of work down around the port. BOSS system, I know I keep standing up here every year telling you how amazing it is, but it has been challenging, and we have got some time difficulties on the third-party verification. We thought we were going to have it before we got to this part of the year, but we haven't. We're still working on it. We've got a few issues around the detailed engineering, minor issues. It's probably another 6 months before we're going to get through that. It's a great system, and it is great for delivering incremental tonnes and all the rest of it. So still a work in progress. The big crushing plant, if you have a look, so we've just cut, this is a very innovative plant. This is going to drop our costs about 30%. We're going to be able to put this on site in about 8 or 9 weeks from nothing to on-site operating, I mean, which is pretty amazing. I mean, the cost of us putting that there is quite insignificant. If we go and build a 25 million tonne plant that's normal in the Pilbara for iron ore, just if you get MinRes to build it, and we're at the low end of the cost curve, high quality plant, about 600 million. This thing here, we could probably put about 12 of them on the ground operating for less than 600 million. So pretty amazing. Almost no concrete. So and very innovative. Designed in-house, and then we've gone out to Metso. They've gone to their big factory in South America, and they wanted to joint venture with us. We have. We retain all the IP rights in it. They'll market it worldwide. We'll market in Australia. So first one is just started getting built. So it's gone from an innovation to a reality. Dump truck trays, carbon fibre, unbelievably challenging. We've got 4 of them, and they're just like that. If it was a Caterpillar truck, I think that one is. So 31.5 tonne the steel tray weighs, 8.5 tonne the carbon fibre tray weighs. So 22.5 tonne savings. So it's good for energy, reduces tyre life. We carry more out of the pit when we're running out full, and less weight running back into the pit. So again, depending on the size of the truck, 10 to 15% cost saving overall in the total mining operation, big bucks. Synthetic graphite, really successful. We've delivered the trial plant. It has exceeded expectations. We're about 96% total graphitic carbon versus the 92 that we thought we'd get. The good thing with this is that it produces a byproduct. It's hydrogen, and we've got some work to do on working out how we can capture and deal with that, but a lot of good stories around hydrogen. So work in progress, but the idea is we go put these units on site, you feed them on gas and a bit of iron ore, and they pop out this high quality graphite. But if we can have them on site in remote locations where the fuel is, and also use the hydrogen possibly in our power plants. Okay, well that's kind of it. I hope we've sort of got there in a bit longer than I expected. Few things to wrap up. First, I just want to extend our condolences to the families. We had a tragedy last week, non-work related. We lost one of our people. It was horrific circumstances. We just want to say to families and all his workmates our sympathy. And I acknowledge also the guys at Pilbara Minerals. Ken Brinson was pretty amazing, and through the whole event it was, you probably read about it, and it's just the most unusual and bizarre thing, but it certainly touched every part of our business inside and out, and it'll reverberate for some time. So staff, I got to thank them. We've got, as I said earlier, I've got the best staff I've ever had in MinRes. I mean, their work ethic is insane, and their ability to deliver has just gone to another level. So I thank all our staff. We have a dinner on for them tonight with the board, so we can do that in a little more detail, but an amazing crew of people that we've got, and hopefully they're going to be around with us for a long, long time. I've got to thank our board. They're very supportive of the management. They give me a lot of rope and allow me to deliver some of the results that we get, and when I need support, they're always there, and they've done an outstanding job. And the shareholders, I want to thank. We've got some shareholders. Phil, David, been with us from the beginning. Really, really important to us. I think that's the core of it. But I think our shareholders, if they continue to believe in us, will continue to deliver. So that's pretty much it. I'll open the floor for questions. Jeff, I'm not sure if I answered you, but with those percentages that we deliver on, we can, year on year, I mean, return on capital invested, we can generally better 20%, but, when we go out and spend 900 million, that sort of aggregated our amazing record down a touch. It was a one-off. The spend was out of balance with the income, but it's an investments that we've put into, they're both 30-plus year operations.
Hi, my name's Gwyn and I'm a shareholder. I've just got a comment and then a question, if I may. Congratulations to the MinRes team on 60% sale of Wodgina. You've sold 60% of a lithium mine for just under 1.9 billion. This is an outstanding result considering Min's market cap is 3 billion. Essentially it means that Wodgina alone has a total value of 3 billion, and therefore we as shareholders are getting the rest of the company for free. So thank you. Your next generation crushing plant has the capability to be fully automated. Are you working towards using this automation feature, and what other automation is currently in the pipeline for your business?
Yeah, good question, and well done. I think you're probably the only shareholder that's figured out Wodgina. Well done. Automation is something that we're working on fairly heavily. We've been putting automation capability into a number of our plants over the last 2 or 3 years. When we move into the new office, we're going to have an autonomous room. So we're going to hook up, obviously, these next-gen plants, but then Wodgina can be hooked up to it. Mount Marion can be connected to it. Our train sets will certainly be hooked up to it. There is a bunch. Our power stations will be a no-brainer. So, given about 2 years down the track from now, we'll be able to hook them up. And the beauty with autonomy is that what we like to do with autonomy, I mean, you've obviously got to have people on site that do the maintenance and the push buttons and do certain things, but to be able to start the plant up and run it and manage the settings on the plant, if you take that out of human hands, it's amazing what the plants will deliver. We just don't want humans having choices on twitching valves and doing those sort of things. But the autonomy that we have in front of us is seriously amazing. But there's some areas, I'm not sure that we'd be looking at autonomous dump trucks, for example, in the next 5 years. I mean, some of the miners out there have spent a huge amount of money on them, but I think that's best left to Caterpillar, and when they kind of get that right, we'll probably join up with them. But yeah, good question, thank you.
My name's Simon. I'm a retail shareholder. I wanted to thank you for closing the deal. It was amazing M&A to close that deal, I think, in this lithium market. I wanted to ask, in terms of Albemarle's various lithium assets, how do we rank in terms of things that they would switch on as the price recovers? And secondly, do you have any comment on the quite large short position that seems to be sitting on the stock? Could we maybe do a buyback and crush them or something like that?
Music to my ears. Yeah. Honestly, I think shorting should be illegal. It's not available to everybody. The retail can't do it, but I'd love to be able to do them. But I mean, look, the issue I have is that if I can't get the returns that I get out of the business, then we'd go and do a buyback. But we just get better and better returns. In terms of Albemarle, I mean, there's great opportunity out there with those guys. They're an outstanding company. The management's outstanding. We have got good opportunity going forward in the foreseeable future, next 12 months. to look at other areas that we can have hydroxide converters. So to take, I mean, at the moment, you know, a tonne of hydroxide is probably worth 600 US, of spod, and it's probably about 10-ish thousand for a tonne of hydroxide. That's where the big bucks are, the margin is. So we are aiming on trying to make sure we've got a lot of converters operating within the next 2 to 3 years. And Albemarle's a great partner for that. They've got the technology, and they're certainly the leaders in marketing.
Great, thank you.
Hi, I'd just like to thank you first of all. Your safety report seems to be really impressive. I'd like to congratulate you on that. I've got a question on behalf of Ross Knowles. Through our 2017 acquisition of Energy Resources Limited, Mineral Resources now holds interest in 9 oil and gas exploration permits. Apparently we've been moving towards planning and approvals and planning to commence drilling next year. I'm just trying to work out the rationale behind Mineral Resources moving into the oil and gas sector at this point. We have an entire section of our sustainability report on managing, quote, managing our resource use and environmental impacts while innovating towards a low-carbon economy, unquote. Yet the company is spending capital on undeveloped fossil fuel assets that are not going to be needed in a Paris-aligned carbon constraint scenario. So can the board please explain the dalliance into this area that faces considerable transition risk and community opposition, bearing in mind we've already seen some protesters out the front this morning, when it's so far removed from the company's core business? Could you answer that, please?
Yeah, of course, absolutely, good question. Let me give you a choice, first of all. What do you want me to burn in the pits? Do you want me to burn diesel or gas? Your call.
Well, they're both carbon, they're both emissions, aren't they?
You've got to make a choice, because otherwise I've got to put 3,700 people out of work. We mine for a living. I mean, this community survives on mining. I'm not here to try and do anything negative to the planet. We are working our butts off to try and clean up what we're doing, and we're seriously focused on it, but I can't do it overnight, and neither can the kids out on the street do it overnight. What we can do is that we can go, we're going to do better tomorrow than we've done today. So my aim at the moment is I burn about $250 million worth of diesel this financial year, $250 million. What I want to do is I want to get that down to zero. If I can burn gas, I'm probably going to put about half the emissions in the atmosphere that I'm doing right now. And I'm hoping that one of these 16-year-old bright sparks is going to come up with some form of energy where we don't put any emissions into the atmosphere. I'm not smart enough to do it. All I can do is aim to do the best that our organisation can do. So here's what we want to do. We drill a hole, we find some gas, we put it in an existing pipeline, we can immediately distribute that to sites within reach of that pipeline, or alternatively I go build an LNG plant, and then I can truck LNG because it compresses 600 times when you bring it to minus 161 degrees C. I can economically truck that into the goldfields. If I send it down the goldfields pipeline, it costs me $4.80 a gigajoule. I can get it down there in the back of a truck in LNG for $1.20. So what can't I control in all that? I can't control the price of gas. So if I make all these mega investments in MinRes based on gas, I need to know I can control that price. If we've got our own gas, we own it. I know that for about $2.50 a gigajoule, I've got it for 20 years. So then I can safely spend that money and reduce emissions. But look, believe me, the last thing I can tell you one thing, I got no coal power stations on my mine sites.
Good.
So I've taken that step. I've got no horses.
Yep.
I've got vehicles. I've taken that step. I'm still driving a combustion engine car, but the very next one, I was telling my wife the other day, the next one I get is going to be electric, I promise.
Fantastic. Okay, in that case, can I just draw the board's attention to a report released earlier this year by Global Witness, which found that over the next decade, any production from new oil and gas fields beyond those already in production or development is compatible with limiting warming to 1.5 degrees, and all of the 4.9 trillion forecast capex in new oil and gas fields is incompatible with limiting warming to 1.5 degrees. So with that in mind, can I ask the board that the board commit to stress testing our oil and gas plans against the 1.5 degrees warming scenario before continuing to throw money into your gas ventures?
Well, look, on behalf of the board, I'll give you this commitment that I will ensure that they don't approve any capital for doing anything on oil and gas unless we're going to have a net reduction in emissions as a result of that.
Thank you. Thank
Pleasure.
you.
Thank you.
Good afternoon. Thank you very much for the work you said today. Highly commended. Your company is amazing. I also have a climate change concern. I'd like to ask a question. Given our company's exposure to the steelmaking industry, we must have a considerable Scope 3 emissions profile, representing a significant exposure to climate change transition risk. Are institutional investors asking Mineral Resources to disclose Scope 3 emissions? When can we expect to see this disclosure?
I just knew someone was going to ask that. Look, there's one brave guy out there in Australia so far that said that he is going to get involved in his customers' emissions. I'd be realistic with you. We're a small mining company in comparison to others. I fail to see how anybody can get involved in their customers' emissions. I mean, most of our product goes to China, you know. Good luck with that. We're doing the best we can, is all I can tell you. We don't have, we are a mining company. We are putting emissions into the atmosphere. We know that. But we can just keep doing the best we can. I don't have an answer for what our customers do. And I can't say that I want to stop mining anything that goes downstream and then something happens to it. I mean, I think that our customers are working hard on trying to be able to reduce emissions. I know they are. And they're looking for cleaner ways of being able to make steel. And I think, you know, seems like the planet needs a fair amount of steel. I mean, they are working hard on it. I know the guys, for example, from Bow Steel are doing some pretty amazing things out there. So, I mean, I think we just have to trust in our future generations just to keep being able to do things smarter and better than what we've been able to do them. I'm sorry I don't have a real answer for you on that.
I note that BHP has committed to disclose public goals to address the Scope 3 emissions, and a German steel producer last week successfully demonstrated the ability for hydrogen to be used to fuel a steel blast furnace for the first time. What is Mineral Resources doing to make sure it is not left behind in the low carbon transition?
Okay, so we're doing synthetic graphite, we're doing hydrogen, we're trying to get diesel off our sites, we're trying to do, honestly, we are trying to do as much as we possibly can. And look, I'll say it again too, look, I know that some of those steel producers, and certainly in Japan and China and Korea, are working very hard on products like hydrogen, and they are as concerned as you are about what they're doing, and they are certainly in the last 5 years, they've made some significant steps in emissions reduction right across the planet. Pleasure.
Yeah, hi, Quinn again, and also I forgot I'm a member of Team Invest. Just focusing back on the business. With the Elbonar site, will you be awarded the life of mine contract for processing of Elbonar Hydrox product?
No, that'll be where we can at Wodgina and down at Kemerton. We're going to self-perform down there inside the JV. So we've got the skills to do that, and we kind of, they've got the skills on the chemical. We have it at Wodgina on the mining processing, but we kind of figured what we really want to do, it's a 30+ year operation, both at Wodgina and down at Kemerton, probably 50 years. So what we want to do is we want to get people that actually own the brand name, and we want them to make that their home. So we thought maximising the value, the bottom line, is what we're after, and it was probably the best way of doing it. There are areas where we don't want to self-perform, and it may be that MinRes may provide that service long term. So we are looking at those opportunities, but not the mainstream.
Good morning. Good morning. My name's Peter Sampson. I'm a proxy. In regards to the work plans with the permits in the Gingin area, when do you envisage the seismic work will be completed? And when will you plan to start drilling and stimulating new wells there? And do you expect, as well as gas, would there be oil in that region?
Okay, so the numbers I'll give you, 250 kilometres of the seismic. We intend to carry that out during the course of next year. I'm not exactly sure when, but just during the course of next year. And I think, look, about the middle of next year is when we're planning on popping that hole down. And look, we want conventional gas, don't we, Shelley? Only conventional gas. And it would be really bothersome if we hit a mother load of oil. We just don't want to do that. We just want clean gas, conventional. So we could all pray that we don't go and hit a mother load of oil, all right?
Hello, I'm here again on behalf of Mr. Lustig, and as I mentioned before, he was asking about fracking. To follow up on what you already said about fracking, you've indicated that Shelley is very concerned about the optics of it. Will you rule out hydraulic fracturing in WA?
I wish I could give you I don't know that much about fracking. I mean, I tried to read up on it. They gave me some stuff to read last night because they said expect some questions. But look, all I can say is this, that we are in a region, Perth Basin, where the adjacent gas finds are significant and they are conventional, and we don't believe that anybody has a need to frack in the Perth Basin so far, and we hope that life will be good for us. We'll drill a hole, we'll find some gas, it'll be conventional, and we will, I don't exactly know whether fracking is dangerous or it does anything bad. I mean, I know that in Queensland they're doing a lot of fracking, in the US they're doing it, certain other states in Australia they're doing it, and I've read some reports that say that fracking does not harm the planet, doesn't bother the water supply, and I've read others that say it does. My plan is clearly not to frack, and I know the question you want to ask, what if you get tight gas and you absolutely have to frack? And I'll ask the shareholders to vote on it. Do you want me to frack and get that gas out or still the hole? Okay, you're done. I'm kidding. I am serious. I'm serious that we don't want to be in the firing line, and we think that everything will be normal in the Perth Basin. I mean, we're going to drill a hole, and if it just happens to be conventional, I hope that you and I are still good friends this time next year. But I do care, and our business cares.
Hi, Ron Smart, a private investor and a member of Team Invest. I see that you're a major investor in Hazer Group, and they plan next year to build their first commercial demonstration plant, which will produce 100 tonnes of hydrogen, I think 400 tonnes of graphite. There was talk yesterday at the meeting that they'll be able to develop a modular plant to produce hydrogen at remote locations to use as a fuel for trucks and plants. Do you see any future for MinRes in that venture?
Yeah, of course we do. We're probably the largest shareholder. We've got one of our guys, Mike Gray's a board member of Hazer, and we joined them for that reason. So what we've done over the last couple of years is we've been working on developing the synthetic graphite side, but it does have that hydrogen byproduct. They've been focused more on the hydrogen, and they're doing that jointly. So we actually give them space in our yard down in Kwinana. So they get yard space, office space. We've done that to try and get their costs down and to try and help them to accelerate to get there. We would want to be a big part of that hydrogen development if they crack it, and they've made some good inroads. But that's why we invested in them. The hydrogen is probably 75% of the attraction to us. And I think that, you know, hydrogen is probably going to be part of the story going forward.
Hi, David Mania, small shareholder. I'm intrigued by the motivation of your gas ventures. I thought I heard you say if you find gas, it will be conventional gas, that you will put it into an existing pipeline and then do various wonderful things with it around the country. But drilling for gas is high cost, high risk. You're going to put the gas into existing infrastructure, presumably owned by somebody else. How much benefit do you expect to get that you couldn't get by buying the gas from the existing suppliers?
Do you work for Kevin Gallagher?
No.
So what I'm looking for in owning our own gas is I am looking to make sure that the parts of your business when you're exporting iron ore or you're in the mining business, the parts that keep you awake at night are the parts that you cannot control. Shipping costs, exchange rate, the cost of oil, fuel, diesel, those things keep you awake at night. If I can power my mining sites going forward with a known fixed cost, I can then sit down and work out how much capital I can go and spend right across my business and over what period of time. So what a luxury, for example, if I could say that I know that my cost of gas is fixed at, say, $2.50 a gigajoule, and I can lock it in there for the next 20 years for all of my sites. So I'm looking for surety of supply. So if I go and build, for example, all of my sites to run on gas now, I can get my emissions down fairly quick, and I've done that anyway, wherever I can. We've just finished building an 83k 10-inch pipeline into Wodgina. So I need to know what that looks like. If I do it at the moment, I mean, we can go out and buy gas at the moment on the spot market, 250, shall we? 280 a gigajoule? Less. If I'm sitting here and I go and spend $1 billion, maybe more, you know, it's 101 million I spent at Wodgina just plugging in that power station in the pipeline. If I spend $1 billion, I need to know that the price of gas isn't going to go from $2.50 to $10 a gigajoule. It did on the East Coast. It does it all over the world. It'll do it here one day. So what I'm looking for is that surety of supply so that I know that when I invest all that money, that I'm at the end of the day, I'm going to get a return and I can pay a dividend and I can stay in business. It's just one of the fundamental things of running a business. You've got to be able to know your costs, control your costs wherever you can. And we're fairly good on that. You know, it's other mining companies out there, for example, you know, they go out and buy ships. Why do they buy ships? Because, you know, the price of a ton of iron ore up to China can range from $4 US a ton, and I've seen it at $52 US a ton. So We're trying to control costs to stay in business. We've got an amazing array of food out there, if anyone gets tired of questions. But I can answer them all day. I know my business well. Anyone else?
Alan Dixon, Australian shareholders. Just a quick one. With Mount Marion, can you feed that through to Kementon? Does your deal with Albemarle allow that to happen?
Never been discussed, but the answer is we probably could. We just simply need to talk to the board of Marble, which now owns Kemerton and Wodgina, of which I'm a member, as Mark. And I'm sure that Albemarle's aim is to make money out of producing a high quality product and being able to. They're very focused on what they deliver to their customers as well. I mean, but look, I think the answer would be yes. If the price was right and the product fitted, I don't think Albemarle would have an issue with it. It has crossed my mind, I can tell you. I'd hate to think I have to go back to New York and negotiate that. My wife loves it. It cost me a lot of money. I just had to tell him, I said, this is the last deal I'm doing, because every time I come to New York to see you guys, I've got her beside me. And she doesn't do it when I go to Tom Price. Okay, so look, I appreciate you all coming along. Thank you for the loyal, devoted shareholders. And look, I can assure you guys on terms of fracking and what we're doing with our emissions, we are as focused on it. We spend a lot of money on it. I think we're more focused in those areas than a lot of the larger companies. But you know, I also know that China, Japan, those guys, they're working pretty hard to be able to clean up the atmosphere. I know it's not the answer you're looking for, but we're doing the best we can with the circumstances. But if you do have questions, I mean, you can contact me. You can get my email. It's pretty easy. I'm more than happy to sit down and have a coffee with you and tell you, or hear what you've got to say going forward. So we're serious about what we're doing, and I'm more than happy to meet with you and talk about it with anyone for that matter. I mean, time is pretty busy at the moment, but I will make time especially for those sort of issues. So look, thanks everyone for coming along, hearing our story, and we will hopefully deliver. I'll hand it back to Peter to close. Thanks, Peter.